Welcome back to Explain the Charts, where we break down complex market data, making trading and investing a little less intimidating. Today, October 29th, 2024, we're taking a look at Intel, the Intel Corporation stock. Let's start by reviewing the recent news and market events that are impacting Intel. First, we see that Intel stock has been on a positive trajectory in recent days, outperforming its competitors with a strong trading day on October 28th. This performance could be attributed to several factors, including a potential Qualcomm takeover, which would benefit both companies by leveraging each other's strengths, including Qualcomm securing its own manufacturing facility and boosting margins. Additionally, Intel has entered into a partnership with Amazon Web Services, AWS, to supply custom chip designs aimed at regaining market share from NVIDIA in the AI space. Furthermore, Intel's announcement of spinning off its foundry business into a subsidiary aims to secure funding for this struggling segment, which has faced challenges against competitors like Taiwan's semiconductor manufacturing company, TSMC. However, despite these positive developments, analysts remain cautious about Intel's stock, citing concerns about its expensive valuation, competition from companies like AMD and ARM Holdings, and its past struggles. Despite the recent positive performance, investors are keenly awaiting Intel's Q3 results, scheduled for October 31st. Investors will be looking for detailed information on Intel's fabrication strategy, especially in light of the $8.5 billion in funding and $11 billion in loans received from the CHIPS and Science Act. The health and viability of Intel's fabrication business are under close scrutiny, and investors are eager to gain a closer understanding of their strategy. Now, let's switch over to the chart and see what insights we can glean from the candlestick data. On the daily chart, we see a clear bullish trend emerging, with a strong upward move over the past few weeks. The price has been steadily climbing, breaking above previous resistance levels, suggesting a strong buying pressure. We can identify a key support level around $32, which served as resistance previously but is now acting as support. The price has bounced off this level several times, indicating that buyers are actively defending this price point. Another key level to watch is the recent peak at $44, which could act as a resistance point. If the price breaks above this level, it could signal a continuation of the bullish trend. However, a failure to break above $44 could lead to a retracement back towards the support level at $32. Looking at the 1-hour chart, we can zoom in on the recent price action and analyze the short-term trends. Here, we can see that the price has been consolidating for the past couple of days, trading within a tight range. This consolidation suggests that the market is indecisive about the next move. The price has been testing the upper and lower boundaries of this range, indicating a battle between buyers and sellers. The upper boundary of this range aligns with the $23.50 level on the daily chart, which is a crucial resistance level to watch. If the price breaks above this resistance, it could trigger a strong upward move. However, if the price fails to break above this level and instead pulls back towards the lower boundary of the range, it could signal a short-term bearish trend. A break below the lower boundary of the range would further confirm a short-term bearish sentiment. Let's shift our focus to the 15-minute chart to get a more granular view of the current price action. The 15-minute chart provides a real-time picture of the market's volatility and momentum. Here, we can see that the price has been fluctuating within a narrow range over the past hour. This suggests that the market is still undecided about the next move, with buyers and sellers battling for control. The price has been testing both the upper and lower boundaries of this range, signaling a delicate balance between buying and selling pressure. A break above the upper boundary of this range, which coincides with the $23.1 level, could signal a short-term bullish trend. However, a break below the lower boundary, which aligns with the $22.90 level, would suggest a short-term bearish sentiment. It's important to note that the 15-minute chart reflects short-term price fluctuations and can be highly volatile. Traders should exercise caution when relying solely on this time frame for making trading decisions. Now, let's summarize the key levels and potential predictions, keeping in mind that markets can be unpredictable. The $32 level on the daily chart serves as a strong support level, and the price has bounced off this level several times. The $44 level also holds significance, acting as a potential resistance level. A break above $44 would reinforce the bullish trend, while a failure to break above could result in a retracement back towards the $32 support. On the hourly chart, the $23.50 level is a key resistance level, and a break above could trigger a strong upward move. Conversely, a failure to break above this level, coupled with a pullback towards the lower boundary of the range, could signal a short-term bearish trend. A break below the lower boundary of the range would further confirm a short-term bearish sentiment. On the 15-minute chart, the $23.1 level represents a short-term resistance, and a break above would suggest a short-term bullish trend. Conversely, a break below the $22.90 level would signal a short-term bearish trend. Traders should remain cautious as the 15-minute chart is highly volatile and reflects short-term price fluctuations. It's crucial to remember that these predictions are based on the current market conditions and could change with upcoming news and events. For instance, if Intel's Q3 earnings report falls short of expectations, it could negatively impact the stock price, potentially leading to a decline. On the other hand, if the earnings report surpasses expectations or if there are positive developments in the technology sector, it could strengthen the bullish trend. Furthermore, any significant changes in the geopolitical landscape or economic conditions could also influence the stock's performance. Therefore, it's essential to stay informed about relevant news and events and closely monitor the chart patterns for any potential shifts in the market sentiment.